Well, I think that we are at a major inflection point. Singapore has underperformed the global market for the past decade. I believe this is about to change. We can see it from this chart, which compares the performance of the MSCI Singapore Index versus the MSCI World Index. That Singapore equities have underperformed global equities. Recently, investors prefer global equities to Singapore equities. If we look further back over the past 30 years, we can observe that the performance of Singapore equities goes through periods of outperformance and underperformance every 10 years. This is an important chart. This cycle mirrors the global economic inflation cycles, from the export-driven Asian miracle growth of the 1990s and subsequent tech bubble in the early 2000s, to China's entry into the WTO that led to the commodities and real estate boom in the late 2000s, followed by central bank quantitative easing in the 2010s. Notice that we are currently at levels not seen since the Asian financial crisis in the late 90s. And yet corporate balance sheets are comparatively stronger now. This is why the Singapore market is at a very compelling turning point. Now, what could the next decade offer? Beyond the COVID-19 pandemic, we could expect Singapore equities to outperform on the back of stronger growth prospects and rising inflation expectations globally. With rising global bond yields in the first quarter of 2021, we are now seeing early signs that the next cycle could be an inflationary one, which bodes well for the Singapore market. This recent inflationary trend can also be seen in the movement of copper prices. Because of copper's widespread applications in many sectors of the economy, the demand for copper is often viewed as a lead indicator of global economic demand. This chart shows the price of copper as a proxy to the global economic cycle. There has been a recent spike in the price of copper from 2020 to 2021, suggesting that we could be on the cusp of a new inflation cycle. This is why we think Singapore equities are on the start of a structural trend in outperformance. This new cycle could be driven by a multi-year increase in demand, such as through the global proliferation of green infrastructure development. Singapore companies may benefit from three main ways. The first is the progression of technological adoption. We believe that Industry 4.0 will be a major structural development for companies in Singapore, as technology and industrial use cases finally converge. Sectors such as contract manufacturing, semiconductor supply chain, oil and gas, transportation, and logistics look promising. Secondly, Singapore is also a well-established commodities trading hub. An improving commodities cycle generates wealth across Asia and may benefit our banking and property sectors. And finally, Singapore remains a premium banking jurisdiction in the Asian time zone. Singapore will continue to benefit from safe haven flows across Asia, both in the wealth management and property spaces. Yes, I believe so. In terms of relative performance to global equities, the Singapore equity market has underperformed. This presents an interesting entry point for the Singapore market. In summary, we are at the start of a new global inflationary cycle that could last for some time. Global growth could be upon us post this pandemic crisis. Under such conditions, the Singapore market has the ability to outperform the global markets, and we should prepare ourselves for this major shift.